Howdy, folks. Hello, hello, hello. Howdy, chat. Hope everybody's doing phenomenal. Let's go through today. Oh, yeah, baby. Oh, yeah. So if we look at the indexes here today, so put to call ratio looks like it's jumping a bit here. Hong Kong looked good last night. Silver up a little bit. NASDAQ's maybe sneaking out a little bit of gains here today. S&P 500 trying to hold on to gains. Dow's slightly red, and I mean very slightly. VIX not really doing much. Russell down just a teeny bit here today after its huge outperformance day yesterday. Crude down. I like that. I like that a lot, folks. Crude oil down. That's great news. That's what I like to see. Do not want to see crude oil going up. GSG down. That's good news. Good news. All right, so in terms of stocks I own, so Elf making a pretty good move here today. JWN making a pretty decent move. Meta, if Meta's up, that means the public account's probably looking pretty good today, because we know Meta's such a heavy weight in there. Fubo slightly up. Amazon up 1%. WBA not doing much. WBA earnings are tomorrow, so that should shake that stock around. We'll see if we can get some clarity about the executive picture and what's going on there. The company's running with no executives basically right now, or it's a weird situation. Palantir trying to cross 18. Did Palantir hit 18 today? Let's see. Oh, wow. Palantir at the open was well over 18. And then weakened. Wow, interesting. What a year for Palantir. Congrats all fellow Palantir bulls out there. Man, oh man. As far as downside movers, Texas Roadhouse is down. Love that. Go down, baby. Go down. Love Texas Roadhouse going down. That's one I want to build a huge position in over the next, next year. To be honest, I could buy that stock for 10 years straight. It doesn't matter to me. That's one I would just love to continue to load up on for a while. So rooting for that one to go down. Other than that, nothing too crazy out here. Let's take a peek at big tech. Netflix having another tough day. Something's going on with Netflix, folks. Stock was by far and away the worst stock of big tech yesterday. It was down 3-point-something%. Today, it's the worst stock of big tech again, battling it out with Shopify. Something's going on with Netflix, folks. Something. I don't know what, but something's going on there. AMD red, Salesforce red, Oracle red, Tesla slightly red, Uber very slightly red. And then Adobe's the big winner, chicken dinner out of everybody today, up 3%. Google and Meta also kind of leading the pack. Those have actually been seen as flights to safety. What a change, what a change, what a change. Trending news, UAW strike update. Detroit auto giants trade shots with the union over layoffs. Therapeutic stocks soars 1,650% on updated study data. Holy smokes. Wow. Exxon Mobil on track for its biggest daily drop since March after Pioneer deal. What are they doing? A buyout people don't like? Or what? Exxon is in Wednesday's trading is on track for the stock's lowest close since early August and its largest one-day percentage decline since March 15th, following news of blockbuster acquisition of Pioneer Natural Resources. Oh my gosh. Yeah, huge dilution. Huge dilution for Exxon shareholders. Oh my gosh. Almost a $60 billion all-stock deal in which Pioneer shareholders received 2.32 Exxon shares for each Pioneer share, which will cause a 14% dilution in Exxon shareholders. Yeah, I knew that wasn't going to be a small one. Despite sitting on nearly $30 billion in cash and cash equivalents at the end of Q2, Exxon will issue 540 million shares of stock to pay for Pioneer, but the company said its strong balance sheet coupled with added surplus of free cash flow from Pioneer should allow enhanced shareholder returns. Jeez, man. Ah, gosh. We are not surprised to see Exxon use all stock for the transaction, given the timing at well above mid-cycle conditions, with Brent about $87 a barrel, says this gentleman from JP Morgan. Adding that an all-stock deal often have been a preferred method of de-risking the potential of oil price volatility for the buyer. Strategically, the deal is a home run for Exxon, said this gentleman, filling the only identifiable question in the portfolio, increasing its Permian Basin footprint, which has been smaller than its peers Chevron and Occidental, and on valuation, the price is reasonable. It's a massive oil deal, and it demonstrates that ExxonMobil's bullishness on the long-term demand of oil and prices. It is also a deal done from a position of strength for ExxonMobil. Interesting. Yeah. I mean, at the end of the day, we all know oil is going to remain around, right? There's probably always going to be needs for oil. Always, right? At least some sort of need. But with that being said, we do know in terms of the demand needs for oil over this next decade, it's going to crash in a massive way, right? There's no doubt about it. Like, there's not even a question that, like, the demand for oil is going to crash over the next 10 years. It does not mean there's going to be no need for oil in the next 10 years. No different than if the stock market crashes, doesn't mean this crashes to zero, but like, it's going to crash massively and it's not coming back. Like, that's the thing. Like, the demand is just going to get less and less and less as years tick on over this next 10 and 20 years. And so, and by the way, that's one of the reasons I can't invest in pretty much any of these stocks, because I just don't like owning an industry that I know is just going to get worse year to year after year for 10, 20 years to go in the future, even if price remains in an elevated place, right? So that's just kind of my opinion. And at the end of the day, higher prices go, the more and more people are going to consider EVs. More and more people are going to consider EVs for their next vehicle, right? That's bottom line. Like, the higher gas prices are, the more people say, hell with this. I'm getting an EV for my next vehicle, right? So that's just not a great place to be. Let's take a peek at Goldman Sachs here. So Goldman Sachs, obviously, since an investment bank, their cash and cash equivalents and things like that are going to look insane, right? Because you're holding a ton of money, but it's not as insane as it looks in terms of, like, it's not like Goldman Sachs necessarily has all that money to just go do deals or something like that. It doesn't really work like that. But anyways, $270 billion of cash in investments, but look at their accounts payable, $257, right? So that's something to keep in mind there, right? That I think is very important. Long-term debt, $235 billion there. So total liabilities of $1.45 billion. Total assets of $1.57 billion for Goldman Sachs. So total common equity, or total equity for the company, is around $117 billion for Goldman Sachs, which is an impressive number. What's Goldman Sachs about? I'm going to guess Goldman Sachs market cap is $155 billion. I was way off. $109 billion. Okay. That was about $45 billion off there. Interesting. I want to make sure. Oh, did I miss it?
Mm-hmm. The good news is you did a great show earlier this week about dividend growers, which is the world that I live in.
Sure.
And I feel like there's momentum starting to build up under the surface.
Right, not just dividend payers, dividend growers.
Yeah, big distinction, because I think the high dividend stocks for many years was a proxy for fixed income.
He's stealing my whole flow.
Now
this is what I'm talking about, man.
6% in the money market now, and that feels great. In fact, I saw something that said there was over $6 trillion in money markets right now. Unbelievable.
Not surprising. So on that note, been a bunch of focus on staples stocks, right, that have, over the last few weeks, have really gotten hammered. Now, some are rebounding nicely. Pepsi's earnings helped. That stock was up. You sold General Mills. It speaks to sort of this pain that you endured, and I suppose you threw in the towel and said enough is enough.
We did, and that's the problem. We love the company. I can't believe how poorly it's traded, but when we have a relative discipline, we're going to stick to it. So if a stock underperforms, we move away from it. We still have exposure to...
It's just dumb. Let's just be honest. That's just a dumb strategy.
Has anything to do with what Pepsi did.
No disrespect, but dumb.
Did you buy more of that, by the way? Did you buy more Coca-Cola on its pullback and on Pepsi?
We haven't owned Pepsi in quite some time, but we have been buying Coca-Cola pretty aggressively on the pullback.
Oh, you have been?
Yeah, I think that there's value there. The dividend growth, just a stalwart company. Pepsi did a great job, so I'm hoping Coke will follow.
You bought more Cisco.
Yeah, Cisco I bought for the first time in a really long time. We were here at the deal the day they announced the Splunk deal. And that wasn't really the catalyst for it, but I think if that does go through, it does help with a lot of things having to do with cybersecurity, software. It's a company that even in the absence of the Splunk deal prints money. 3% dividend, consistently growing that dividend. It's just a constant pipeline for cash flow for shareholders.
The next one is an interesting move that you made just relative to this.
Hey, chat, do you guys own any dividend stocks? And if you do, what are some of your biggest positions in dividend stocks specifically? I'm very curious about that.
Day after this news broke, I mean, the first trading day was Monday after the weekend. Obviously, you saw defense stocks shoot higher.
Yeah.
You sold into some of that strength?
We've been selling Lockheed since September around 450 for relative underperformance. That's how lousy this sector and this stock has been. So looking at this opportunity to sell out of it, it speaks nothing to what happened over the weekend. It speaks more to the fact that I think there's dysfunction in Washington, and it's going to take some time for them to get maybe their act together to do what we would all hope that they would do, which is to support Israel, to continue to support the Ukraine. I still have some Lockheed Martin, but we've been selling it purely as an underperformance on relative price movement, having nothing to do with the tragic events.
Sure, but if you think that defense spending is going to continue.
So, see, oh gosh, guys, this is a problem. This is the problem with, Wall Street. And this is why I get so upset at Wall Street many times, because, their strategies are just so dumb. Okay, my stock's going down a lot. Man, I love the stock. You heard him saying, I can't believe the stock's down so much. I love the company, blah, blah, blah. He's talking about General Mills, right? And he sells the stock. What? Just because the stock's gone down a bunch, to sell, usually by the time you reach that pain, if the great company's a great company, you probably already are at a stage where, it's kind of in a bottoming out process by that point in time, right? But yet these folks do this, and it adds to selling and selling. That's why you get these oversized moves in these stocks, and then you add on the algorithms and AI and, all the machines doing their moves. It's so silly. It's so silly, man. And this is why you see these sell-offs in these stocks. It's just shocking, right? I think PayPal is a great example of that this year. Last year, NVIDIA was a great example of that. Meta was a great example of that. Every freaking tech stock was a great example of that, right? Where they all sold off 50, 60, 70%. Did it make any sense? No. Was it smart? No. But that was a market we were certainly in. And so, man, just bad decisions. Great companies, if they go lower, what would Buffett say? What would Warren Buffett say? If I own a great company, if he owned General Mills, and he's like, I love General Mills, it's going to be great stock for the next 10, 20 years. If General Mills stock was crashing, and he felt just as confident about the stock, the company, right? What would he do in regards to stock? Would he sell it? Would he buy it? Would he hold it? He'd buy it. He'd buy it and buy it. He certainly wouldn't sell it, right? And so, but anyways, Wall Street makes these strange decisions, man. But for us retail folks, it gives us such great arbitrage, because we don't have to worry about all this stuff of the stock's underperforming, so it's going to make my returns look bad versus my competing fund over there, ETF or hedge fund or whatever. We can just make our stuff happen, right? And you just get these opportunities that are just absolutely beautiful. Absolutely beautiful. By the way, thank you everybody that follows here on Twitch, and thank you everybody that subscribed. I appreciate you all. Let's see. No one owns any dividend stocks? Not one person owns a dividend stock that's watching this right now? Wow, that's surprising. I'm very surprised at that. Holy smokers, that's no joke. Not one person owns a freaking dividend stock? That's crazy. Not even one? Not even one? Wow, interesting. It's all growth investors in the house. All right, shout out to the growth investors. Elf on the shelves. Tesla my Eslas. Palantir, don't bring me tears. Interesting. This person says Netflix stock is still a stock to avoid. Wow. Netflix is one of the world's largest entertainment companies and is a world leader in the global video streaming market. On October 18th, Netflix will publish its financial report for the third quarter of 2023. Company's paid memberships amounted to 238 million at the end of the second quarter, which is about 17.7 million more than previous year. At the same time, the company's non-GAAP PE on a trailing 12-month is 39.76, which is 205% higher than the sector average of 44.63%. Interesting. Yeah, I mean, Netflix is always going to trade at a far superior premium to the sector. And should it? Absolutely, Netflix should, right? I don't even own Netflix stock right now, but there's no doubt Netflix should trade at a substantial premium. They usually have much better growth than any of their peers have, right, in their industry. They have pricing power, they have scale, and they have a worldwide known brand. Like, they should always command a much higher valuation overall. Marshmallow says, I got a separate dividend account, but it's an afterthought. Interesting. Okay. So a lot of you guys aren't too into dividend stocks. And honestly, I think people are going to get more into dividend stocks over this next, I would say this year and next year. And the reason being is, I think we got a lot of opportunities emerging in dividend stocks that we just haven't had in past years. People start getting interested in a lot of stocks in taking them more serious when you can get them at, multi-year lows. And a lot of these dividend stocks are at 2-year lows, 3-year lows, 5-year lows, 7-year lows, 10-year lows. And so I think it's going to get more interest. I would certainly say that. Then if you add on top, let's say big tech continues to rally into year end, and let's say big tech has maybe a little bit of an off year next year, I think that would drive even more attention potentially to a lot of the dividend payers. All right, let's see how we're getting close to the close of the market here, last 15 minutes. Let's see. S-Day. Go down, S-Day. Thank you, baby. Rivian down a little bit. Had a great day yesterday. Same thing with Avant. Those stocks had tremendous days yesterday, so giving a little bit back. Pepsi. Surprised Pepsi not seeing any follow through. That's interesting. Amazon is rolling. RH, I need you to go down. Come on, RH. Don't go up, baby. Nike's another stock I started buying recently. I would like to see Nike go down all the way to Chinatown. Dutch Bros, I need you to crash under $20, please. That would be preferred. I would appreciate that. Yep, looks like Netflix is going to be the biggest L today. Wow. Tesla's still ahead of the pack. Ooh, sell article. Tesla's overpriced stock is susceptible to growing competition. Interesting. All right, let's hear. Obviously, in China, Tesla does have a lot of competition, but I don't think they have as much outside China. Yep, they talk about China EVs. That makes sense. Showing top-selling electric vehicles in China from January to June 2023. Tesla Model Y was number 3 best-selling in China. Model Y. Did I say Model 3? I think I said Model Y, right? It was number 3 best-selling. The Model 3 was the 10th best-selling. So, that's interesting. It's clear in China, at least, the Model Y is where strength is. So, still can't get my wife on board with the Tesla. What in the world? That's crazy. Oh, we already watched the 5-star stocks thing, but it wasn't very good. And the guy was a little crazy that was on there talking about he sells stocks, he loves it. Low prices because the stock price goes down. My intelligence went down a little bit when I heard that. So it's clear, obviously, Tesla has a lot more competition when it comes to cars, right? Like passenger cars. But the Model Y is real strength for Tesla, obviously, in China. So it shows BYD. This is market share, Q1 2023. It shows BYD there, Tesla number 2. I was curious if they try to even say like Ford and GM and things like that. So thesis risk. The largest risk to our thesis is technological breakthrough for Tesla that puts it head and shoulders above the competition, enabling it to completely dominate the market. Full AI or major battery breakthrough. Well, they've had major breakthroughs on both of those. I don't know if you've been there seeing that. Sir that's writing the article. Conclusion. We think Tesla has peaked. Ooh, a big statement. Despite the company's incredibly strong performance, year-to-date the company's valuation has left any sense of reasonableness. The company's ability to ever justify its valuation is incredibly unlikely in our view. No, the company doesn't just face long-term risk, it also faces short to medium-term risk from China's EV industry. For those interested in betting against Tesla, we recommend shorting Tesla or using bearish put spread. Let us know your thoughts. Interesting. Wow. Okay. All right. By the way, let's hear what's going on here into the close.
But then you also are seeing such languishing aftermarket performance. There's a clear disconnect between what's going on the roadshow and what's going on in the aftermarket. And, that's something that I really haven't seen in my 10 years of covering this.
Wow. I think that lived up to the hype.
Oh,
I mean, where else are you going to get that kind of detailed under-the-hood information? Thank you.
Got it.
Leslie Picker. Angelica Peebles, Novo Nordisk, big story today, not only for that company, but the residual impact on many other stocks. What do we see?
Yes, Scott. So Novo Nordisk is ending a trial about 1 year early, and that trial was looking at Ozempic, which is the diabetes drug. And that trial was looking to see if people who have type 2 diabetes and chronic kidney disease, to see if that would help slow the progression of the chronic kidney disease. And it's really a good thing that they're ending it about a year early because it means that it already met the threshold to declare success. Now, Novo is saying that they'll have the full results early next year, about in the first half. So we'll see more then, but investors are really excited about this because it could be yet another opportunity for Ozempic.
Yeah.
Jeez.
Thank you, Angelica Peebles, for that. And the impact, Mike, on some of these other stocks has been pretty dramatic.
What the flip? Is Ozempic going to cure everything in the world?
HCA, and then the medical device makers are almost all down. I had someone reach out to me who's in the medical community suggest that this looks way overdone.
Yeah, it's clearly investors are very skittish, and what they see is very few beneficiary disruptors and an entire industry that can be, in theory, eventually disrupted. They're definitely rushing to price those things in an aggressive way up front. I do think when it comes to certain types of medical devices, I always said this, the first element of the bull case for a lot of these artificial joints and knees was average weight of Americans and age of Americans is going up. I mean, it was very much part of that story. Mm-hmm. And of course, DaVita, the dialysis center operator, that's really
down
directly
huge today, right? 20-something%?
In the zone of, obviously less kidney disease, you're going to have less demand. But I agree with you. People are kind of selling first and we'll figure it out later.
As usually happens, right?
Yeah.
It's the knee jerk and then the reversion.
I mean,
exactly.
The dust
you
settles
could almost look at it as, look at how Google traded down on a relative basis when the AI hype got going. Because everyone all of a sudden decided they were going to be a net loser.
That stock is up 40%, by the way, year to date. It is up again today. It's up 4% in a week. So we got about a minute left. And let's focus on what needs to happen tomorrow morning, you think, from a CPI standpoint after the PPI perplexed some on where inflation's going from here. And it definitely had an impact, it would seem, on the bond market.
Yes, it did. At least it sort of halted some of the buying in there at the short end for sure. Obviously, it's the core. Everyone is fixated on, core services outside of housing. We'll see if there's any surprises in there. If not, I think the market can live with it. The responses to the CPI number have not been all that dramatic in recent months because the numbers have been coming in relatively close to estimates. It's not quite been as much of a spring-loaded release as it was last week, but the bond market's going to tell us, if in fact we can take any comfort in the trend of disinflation once we get it.
All right. Well, the folks from Hormel here, they're clapping.
Hormel.
Good reason to. We're going out in the green. The bell rings. I hope there's chili. Where's the chili? I'll send it in overtime with Morgan and John.
Yeah, green. How about that? That's a scorecard on Wall Street, but winners stay late. Welcome to Closing Bell.
Yeah, a little bit of a mixed bag, certainly. pull up heat map. Let's take a look here. The final heat map of the day. I mean, there's a little bit of a mixed bag day out there. Looked like one of those days where people are having a little trouble getting confidence either way. No, just to be quite frank. But obviously the big hits, Exxon, Chevron. And it's interesting Chevron got hit so big because I think Exxon obviously got hit mainly because of their deal they made there, right? Which is going to dilute shareholder value in a major way. Medical devices, look at these stocks. Oh, gosh. Brutal. And, you know, you really go back to certainly last year and early this year, like people were saying, hey, hide out in these medical names, the healthcare related names, medical devices. Man, these stocks just getting brutalized. All right, let's go ahead and take a peek and see what the public account finished out at today. I mean, part of me would love to finish a year over 2 mil in the public account, but another part of me would like stocks to be lower for longer. So that's a part of me that's like, I wouldn't mind. You know, how does a public account finish the year over 2 mil? I think a few things would have to happen. I think Meta has to go to probably 350 plus. Tesla would have to finish the year 300 or so. And then would need Amazon to likely go 150 and maybe Palantir over 20. I think if those things kind of play out, then we're looking at 2 mil plus in the public count for end of year. But I don't think we have much for earnings today after the bell.
Almost touched the 200-day moving average in the S&P 500, which I thought we were going to do for sure. We got close, didn't quite get there. And really, so I think we're between now and 4460 is where I see at least technical resistance on the upside. And then that 4200 are close to 4200 for the 200 days. So I think right now we're between there. Tomorrow's clearly going to be a good day. You know, if we had something, you know, core CPI comes in at 3.9%, or something like that. I think the bond market and stock market would like that. But, you know, the thing for us is there are headwinds. The Fed's probably does have another hike in them. And believe me, if we see this core CPI stall at 4.1, 4.2, something like that over the next couple of months, the Fed's almost has to hike here because that's.
All right, before I roll out today, anybody got any questions for me on anything? I might take some Q&A at the end of these each time before I close out. Anybody got any questions, comments, anything in general, let me know before I roll off here, chat. And by the way, I also appreciate everybody always joining me as always. Man, safety stocks got hit again today. Those stocks just can't get out of their own way. Incredible. Really incredible. It just seems like day after day after day those stocks get hit. Oh yeah, the whole O thing, I'm like, personal goals for the coming years. Man, I really don't have anything that's anything I have in mind for like personal goals in the coming years. Probably should make some stuff as far as that goes, but I'm just always so in the moment, especially recently, that I kind of just stay focused on that and not trying to worry too far out into the future, just focusing on what I got to do. So somebody had thoughts on SBF trial. Not really any thoughts. I mean, he's probably going away for life. I would think that, but you never know. I spoke, to some lawyers about their thoughts on it. I don't know. They thought like there's potential ways out for him. I don't really see it, but that's my opinion. How long do you think it took to reach your first million? Well, I know how long it took. It took, when I become a millionaire, I think I was 28. So you could say it took me 10 years, right? Roughly. So yeah, it doesn't happen overnight. I mean, I guess for a few people it happens overnight. Like they just, get there really quick, but certainly not for me. It took about a decade to get there. So, do elections heavily influence the stock market? Somebody in my private stock group, somebody in the Discord chat recently shared something that I thought was really interesting around elections and performance of the stock market. I'm going to see if I can find that for you guys. Let me see. Maybe it was under market chat. All right, there we go. Like that. I like that. All right, I'm going to airdrop 2 of these to show you guys. I'm going to be pretty fascinated here to see these guys. 2 graphs or charts or whatever you want to call it that you guys are going to love. So this is the one I was talking about, how much do elections actually affect the stock market? And obviously you can clearly see over time, under all these different presidents, Democrats, Republicans, whatever, you can clearly see what happened with the stock market. And sure, some of those presidents, either Democrats or Republicans, sometimes they went down, sometimes they had some hard years, but ultimately overall, the results kind of speak for themselves in terms of how the stock market performed overall, right? There was plenty of Democrats that, were in office and the stock market went up a lot or down a lot at different times, or Republicans, but mostly, the chart's pretty self-explanatory, it's up, up, and away. So that's in regards to the whole election thing. This one here goes to kind of show you how crazy the market goes up over time versus those down markets, right? And when you see this to scale, it really hits you on, because everybody fears these bear markets. Everybody fears a market that goes down in a crash and whatever. Oh my gosh, it's so scary. And then you look at it and you're like, really? We're scared of this? It's like being scared of an ant compared to a mountain lion, right? Or grizzly bear. The bull markets are grizzly bears. And that's what, you need to be scared of. The bear markets are freaking ants. It's like an ant biting you. And it's like, would you rather fight an ant? Or would you rather fight a grizzly bear? Because the bull markets are grizzly bears and the bear markets are ants, man. I mean, it's incredible. Just when you see it to scale, it really hits you. It really freaking hits you. It's like, that image to me is like everything right there. That image is everything. So, I think that's one of those images you want to remember right there. Remember that one, because that's going to help you in the bull markets and the bear markets and cause a lot less fear when you see that image right there, folks, okay? So, anyways, it's going to wrap up today's live stream. I appreciate you guys being here as always. Thank you for being here. Thank you for being subscribed here on Twitch. Thank you for following me on Twitch. And tomorrow's going to be a really interesting show because we got earnings coming out tomorrow. And it's going to be a fun one. Plus a bunch of other stuff happening in the market, obviously. So appreciate you guys. Much love as always. And maybe we'll start the Q&A stuff as something we end each show with if I have time. So, but anyways, guys, much love and peace.